Everyone, I am Pratap here. We are at part 2 of lesson 16. This is the practical lesson for zone confluence. Let us look into the examples related to the zone confluence and how we can manage the risk with the help of the zone confluence. And also, we will look into the examples how we can identify when a zone can be violated with the help of this zone confluence. And the most important and powerful trading strategy, that is how we can do a better trade management with the help of fine tuning the zones by using the concept of zone confluence. So let us look into all these scenarios. And please understand, this lesson is having dependency on the earlier lessons. In case if this is your first visit to our channel, and you can access all the earlier lessons at our YouTube channel. So please go to NeoStock YouTube channel, click on this home page, and then you can scroll down to the playlist Supply Demand Zone Price Action Course. So click on this playlist and then scroll down to the bottom of this page. Then starting from lesson 1.1, and all the lessons are available in an order till the most recent lesson. So please go through all these lessons one by one, and then you can get into this practical lesson. I'm also providing the link to this playlist in this YouTube video description. Even by clicking that link directly, you can get into these training lessons. And links to all these training lessons also available at our Telegram channel. I'm also providing you the link to our Telegram channel in this YouTube video description, so that you can also visit our Telegram channel to find the latest updates. Now let us get into the practical session. So in the previous lesson we learned, if two zones are overlapped, but from different time frames, then that concept is called zone confluence. And look into this NASDAQ index related to the US stock market. This is the monthly chart. So here you are seeing excuse me, here you are seeing a rally candle, two base candles and a drop candle. So this is the way we can draw the monthly zone. So let me draw the monthly zone. Let me change the color to monthly zone. MSZ, monthly supply zone. So this is NASDAQ monthly supply zone. Currently prices are inside this monthly zone. So what is zone confluence? If two supply zones or two demand zones overlap with each other, but from different time frames. So here we need to identify one more supply zone that should be overlapped with this monthly supply zone, but from a different time frame. So generally how we do this approach? We go one time frame below. What is the current time frame? Monthly. What is one time frame below? Below monthly is weekly. So I'm changing the time frame to weekly. Now inside this monthly, I identified one weekly supply zone. See here, we have a rally candle, base candle and a drop candle. So this is a supply zone. Which supply zone? Weekly supply zone. So let me draw the zone. And let me change the color to the weekly supply zone. So if you look into this example, we have two zones. One is the monthly zone and another one is a weekly zone. Both these zones are overlapped with each other. Because these two zones are from two different time frames. One zone is a monthly time frame and another zone is a weekly time frame, and both are overlapped. So this concept is called as zone confluence. This is what we learned in our previous discussion. So what is the advantage of this zone confluence? One major advantage is, by doing this, we can identify the real order flow inside the monthly, where exactly the order flow is there. This is the area. In the weekly area, we have the order flow. Now you may ask a question, can we find further going down one more time frame below inside the weekly, can we find the order flow related to the daily? Yes, you can find. You can go to the change the time frame from weekly to daily. See here, now we have a monthly zone. Inside the monthly zone, we have a weekly zone. Inside the weekly zone, can we identify, can we draw a zone? Yes, we can draw a zone. How we can draw? Maybe let us assume this is a drop candle, 1, 2, 3, 4, 4 base candles, and again a drop candle and a follow through candles. That way we can assume you can draw a zone. Let me change the color to daily supply zone. See, what is that we identified? We identified a monthly zone. Inside the monthly, we identified a weekly. Inside the weekly, we identified a daily. This entire concept comes under zone confluence. So here, there is a zone confluence between weekly zone and monthly zone. And also there is a zone confluence between daily zone and weekly zone. That means all the three zones got the relation. What kind of relation? Daily is overlapped with weekly, weekly is overlapped with monthly. When you have such kind of overlap, that means this kind of zone confluence. And when you trade in such kind of zones, those zones will be having a higher success rate. Provide other factors also should support the trend, the location. But this, when other factors supports, these kind of setups are having higher success rate. That is what I told about fine tuning the zone, a powerful trading strategy. See, you can also trade in the supply zone, right? But is it overlapped with weekly? No. It is overlapped with monthly. But see, what is the difference between this one? This daily zone is also overlapped with monthly. This daily zone is also overlapped with the monthly. But what is the difference? The difference is here daily is overlapped with daily is overlapped with weekly and weekly is overlapped with monthly. But what is the second example? Here daily is not overlapped with weekly. And daily is directly overlapped with monthly. That is the difference between these two zones. When you have two such kind of zones like this, the first one, what is the first one? Daily is inside. Daily is overlapped with monthly. Sorry, let me repeat again. Daily is overlapped with weekly. Weekly is overlapped with monthly. Such kind of setup is having higher success rate compared to daily is directly overlapped with monthly by bypassing weekly. This is having lower success rate. Most of the time, such kind of the zones will be violated easily. But these kind of zones, the zone violation is not easy. I'm not saying they won't be violated. They will be violated. There are other reasons. But it's not easy compared to this setup. This setup, daily is directly overlapped with monthly by bypassing weekly. But here, the zone confluence is there in a proper structure. The structure is daily is overlapped with weekly, weekly is overlapped with monthly. There is a proper structure is there here. The setup is very accurate, but here the setup is not accurate. Why it is not accurate in this setup? Because we missed weekly. Daily is directly went to. So we have less accuracy in this scenario. There are higher chances. If you look into NASDAQ current price See here what happened? The zone is easily violated. This zone is easily violated. But once prices enter into this area, probably there could be a fall from here. Of course, you need to look into the other conditions like trend and location, price direction. They are all plays the important. But what I am trying to say, this setup is having higher success rate. Probably after reaching prices may turn rather than turning from here. Generally, what happens after reaching to the monthly zone, price direction will be changed. And such kind of change you can see when daily is overlapped with weekly is overlapped with monthly. In such kind of situation, mostly you can see a change in the price direction. That kind of setup is having higher success rate. That is what you clearly seen. We have just clearly seen. See here, easily it is violated. Of course, there was some fall there because there are some pending orders in this zone pushed the price. But later on it is, but this is not a significant move. But probably you may expect a turning point in the market once prices enter into this area. Because this kind of setup is having higher success rate. So the setup, what it is saying, the fine tuning the zone setup. I told you it is a powerful trading strategy. It should be in an order. Daily should be inside the weekly. Weekly should be inside the monthly. Even you can further fine tune one more time frame also. Any number of time frame. You can go up to 5 minutes level. Or further, maybe 5 minutes is the least most of the time. You can go. If you want me to go one more time frame, the next time frame below the daily is maybe it could be either 2 hours or 1 hour. Because this is not an Indian stock. If it is Indian stock market related, if it is an Indian chart, Indian market related chart, we would have gone for 75 minutes or 125 minutes. Because this is a US chart, we can go to either 1 hour or 2 hours. So let me change the time frame to 1 hour. So that means inside this daily, can we find a 1 hour zone? Yes, here we identified a 1 hour zone. But see here, observe one important point. 1, 2, 3, 4, 5, 6. Maybe you may consider this is a legging candle because it is a ERC candle. And we have 1, 2, 3, 4, 5, 6 candles. So that way you can draw a zone like this, a 1 hour zone. So this is the way you can draw. Maybe from where prices will turn, maybe from the daily it may turn, or maybe after reaching 1 hour it may turn. It's all depending on the order flow inside this zone. But how we are fine tuning, that is very important. Fine tuning is the approach, the trading approach. Fine tuning the zone is a powerful trading strategy. So the fine tuning always we have to do in the order. Whenever I say fine tuning, the order is very important. Please remember, this trading strategy, the fine tuning the zone. When I say fine tuning the zone is a trading strategy. When I say fine tuning the zone, you have to fine tune by moving from one time frame to the next time frame, going down, and then you have to draw the zone. You should not skip one time frame below. You should not skip. See here in this example, let me change to daily time frame. In this example, what we did, we just skipped one time frame. That is a weekly we skipped and directly we have drawn the daily. Compare it to this, fine tuning the zone, that means following the order. Following the order means, for example, monthly. Inside the monthly, you identify a weekly zone. Inside the weekly, you identify a daily zone. Inside the daily, you may identify a 1 hour or 120 or 75 minutes or maybe 2 hours. If the trading hours are a very long duration within the day, you can go for 2 hours. That way, you have to do the zone confluence. That kind of performing the zone, drawing the zones is called fine tuning the zone. So that kind of approach is having higher success rate. This is the point you have to remember. But provide other conditions also should satisfy, like your trend, price, direction, and location. All these concepts, whatever you learn, they should support. Now let us look into one more example. This time we will look into Bitcoin. This is the Bitcoin chart, daily chart. Now let me shift to weekly. So what is the nearest? Look here. This is here we have a drop, 1, 2, 3, 4 base candles, and then we have a drop candle. All these are all medium size candles. So this is the highest among all these candles. This is the highest value. Look here today. This time what happened? Prices entered inside and then pushing down. Okay, but where? So from where? Because inside you should find an horizon. Where we can find the horizon? By going to the by doing the zone confluence. So go one step down, one time frame down. From weekly, if you want to go one time frame down, the next one is a daily. Go to the daily and find the zone inside the daily. So here we have a zone. We have a rally, 1, 2, 3, 4 base candles and a drop candle. So this is the way you can draw the zone. This is the daily zone. So daily supply zone. And this one should be weekly supply zone. Let me change the color. Yeah. So inside the weekly, we identified a daily. This is called zone confluence. One zone is overlapped with another zone, but time frames are different. Why we are doing? Because to identify the actual order flow, where the real order flow is there inside this. See, prices went very close to this, and then there is a huge. That means there is a heavy order flow is there just before this zone. This is what happens most of the times. We narrowly miss. That is the reason why generally when we want to take an entry, we add some buffer. Instead of taking your entry exactly at this proximal line, before the proximal line, you add some buffer like 0.1% or maximum 0.2%. We can't go beyond that. If you go beyond that, your risk of management is also going to be very difficult for you. Or sometimes narrowly we miss our entry because of the risk management point of view. Sometimes we may miss narrowly. So those who added some buffer before this and took a short trade on Bitcoin, they would have got a very good profit. So can we further fine tune this zone? Yes, we can fine tune. Go one more step below. So what is the next below the daily? That is hourly. Because Bitcoin trades for a long hours, we can go for even 2 hours. Because it is a 24 hours a day, it will be continuously, trading will be there. Go to 2 hours or even 4 hours also you can take. 4 hours also. Let me go to 4 hours chart. So that means inside the daily, going for 4 hours chart. 4 hours time frame. Can we find anything? Yes, we have a rally, we have two base candles and a drop candle. This is a medium size candle. So that's why I can draw a zone like this. This is a 4-hour chart. Maybe inside these 4 hours, now you can fine tune to 1-hour chart level. At least minimum 4 candles gap is there. So you can inside the 4 hours, you can go to 1 hour. This is the way we can fine tune. And fine tuning, what is the advantage? The risk is minimizing every time. This is the point you have to observe. Risk management is mostly you do such kind of fine tuning for managing the risk in a better way and also to find the origin where the order flow is there. So here we have the origin here. From here the move is started. Or even you can also draw like this, zones. This is also you can draw. See, all these are all, this is the LOTL. Within the same time frame, if two zones are overlapped, we call it as LOTL. But from different time frames, that is zone confluence. This is what you have to observe. Here, same time frame, 1 hour level, these two are overlapped. Let me change the color. So this is a 1 hour supply zone. These two are 1 hour, but they are overlapped, LOTL. So that way you can combine these two zones together. So that means you may get a first opportunity within this area, second opportunity in case if this is violated, the second opportunity at the top. But provide the other conditions should satisfy the trend, location, and your price direction. But the point you have to understand how we are fine tuning the zone. This is very important. See here, the last one, fine tuning the zone, a powerful trading strategy. That is what we are doing. Because when you take entry by fine tuning, you will be having higher success rate in those zones. Let me change the time frame to daily. See, Bitcoin, now in case next time again prices enter into this area, the fine tuned area, we will be having some opportunities. Recently, it provided an opportunity. Prices went very close to this zone. Those who added some buffer and took a short trade, they would have got a very good profit. Now, hope you understand how we can fine tune the zone. Always remember, fine tune means you have to go below the zone step by step, one time frame to another time frame without jumping. That means from daily to 1 hour chart or 75 minutes. From there, you have to go to 15 minutes. From there, you can go to 5 minutes. Or if you start from monthly, monthly to weekly, weekly to daily, daily to 75 minutes. And if you change like that is also not enough. What is the actual thing? Inside the monthly, you should find a weekly zone. Inside the weekly, you should find a daily zone. Inside the daily, you should find a 1 hour zone or 75-minute zone. Or inside that, you have to identify a 15-minute zone. Inside that, you have to identify 5-minute zone. That is the way you have to fine tune. That is the way you will identify the real order flow in that zone. And finding the real order flow, what is the advantage? One advantage is there will be higher success rate once prices enter into that zone. And the second advantage is when you do such kind of fine tuning, If one of the zones, the price structure is not good, we can easily tell that that zone will be violated. Such kind of zones can be violated. Mostly they will be violated. Rare situations, probably they may work, but rare situations. But most of the times, in one of those zones, the price structure is not good. Easily we can tell the zone will be violated. Let me show you an example. So this is the stock we have seen recently. That is, I think, last Thursday, Dr. Reddy Lab. Let me go to 75 minutes. Drop, base, drop. So this is the stock identified by our NeoStock software. And such kind of, whatever the software is identified, such kind of zones will give very good profits, especially during the intraday itself. The short-term profit, whatever the profit you are supposed to get in next 3 days or 4 days or 5 days, such kind of profit we get within the same day itself. Because NeoStock software, in our software, we have one special feature called high liquidity zones. By using some special algorithm, we identify. So when prices enter into such kind of zones, mostly we get a very good return from that stock, from that zones. But one condition, provide one condition should be satisfied. What is that one condition? The zone structure should be very good. How do we know? By fine tuning the zone with the help of zone confluence. You already learned the technique, how to fine tune the zone. From one time frame, you go below one time frame. In the time frame, again, go one more time frame below. That way, by drawing the zones, you have to identify. See, if this is a 75-minute zone. So from 75 minutes, I have to go to 15 minutes. If the 15-minute structure is good, then again inside the 15, I have to go to 5 minutes. I should check the structure of that zone. If that structure is also good, mostly this zone will give very good profit for us. Whatever the zone, high liquidity zone identified by our software, NeoStock software. So that way NeoStock software identified this zone, but condition is the structure of the zone is good. The structure of the zone is good or not, you can identify only by using the concept zone confluence. So that is the reason why what we do, we draw the zone because these details are provided by the software. So we have a drop, 3 base candles drop. This zone looks like a very good, excellent structure on the 75 minutes time frame. If you don't analyze this zone by using zone confluence, generally what people will do, directly they feel, okay, we can plan the zone. See here, prices enter into the zone, they would have gone for a short trade. But what happened after that? Prices went beyond that, it hit the stop loss and got the loss. After that, again from here, prices came down. That is a different story. There could be other reasons for that. But our order is stopped out. The stop loss is hit. When the stop loss is hit, we have to exit from the trade. But by using the zone confluence, by fine tuning the zone, we identified, before taking the trade itself, we identified mostly this zone will be violated. When we say mostly this zone is going to be violated, we don't take trade in that zone. How we did that? By fine tuning the zone with the help of zone confluence. You already know what is a fine tuning technique. From the current time frame, whichever the time frame you have drawn the zone, from that time frame, go one more time frame below, draw the zone. Again inside that zone, go one more time frame below and draw the zone. Until 5 minutes level you can go. So what I did, from 75 minutes, next time frame is 15 minutes. So I changed the time frame to 15 minutes, and inside this 15-minute zone, I want to draw the 15-minute zone. When I want to draw the 15-minute zone, I didn't find any 15-minute zone. See here, all these are all base candles. Base candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. These are maybe this is a medium sized leg candle. But at least there should be a base candle, right? There is a leg out candle. But where is the base candle? We have a leg in candle, we have a leg out candle. In between, there is no base candle. That means there is no institutional participation in this zone. How we identified? Because we went one time frame below and we fine tuned. Let us assume in this time frame we identified an excellent zone. Still, that is not enough. Again, go one more time frame, that is next time frame 5 minutes. If 5 minutes is also good, then you can accept a trade. If 5 minutes, let us assume 15 minutes we have a good structure, but in 5 minutes you have a structure like this, then easily you can tell this zone will be violated. So that way we identified this zone is going to be definitely going to be violated because the price structure inside this zone is not at all good. We should have a good structure. Good structure means there should be a supply zone should be there inside this. But there is no supply zone. Even if supply zone is there, the candle should be less than 6 should be there. First of all, there is no supply zone in this example. Some examples you may find supply zone. You might be having a leg in candle, leg out candle. But in between you might be having more than 6 candles. If more than 6 candles are there, it is an invalid zone. We cannot accept trade. Such kind of zones will be easily violated. So that is the way you can identify well in advance whether the zone will work or it is going to be violated. For that, you need to, every time when you draw the zone, maybe you may take entry at 75 minutes level. Maybe you may take entry at one day zone level. But still you have to do fine tuning to check the quality of the zone. Many people doesn't do that kind of check. They want, especially swing traders. Swing traders means WIT time frame or MIT time frame. Monthly income trade or weekly income trade. You know what those traders will do? They will draw the zone and monthly time frame. Inside the monthly, they draw weekly. Inside the weekly, they draw the daily. Once prices enter into the daily zone, they take the trade. If it is a demand zone, they will take long trade. If it is a supply zone, they take short trade. After taking the trade, it will hit the stop loss. Okay, they are happy. Stop loss, it is within their stop level, within their risk level, they are happy for that. But why we should accept that particular loss? In case if we are in a position to identify well in advance, the zone is going to be violated. If we know that approach, why you want to take the trade? Even though you are taking trade on the daily, from daily go to 75 minutes, check the quality of the zone. Again go to the inside 75 minutes, go to the 15 minutes. Check the quality of the zone. Again inside the 15, if the quality is good, go to the 5 minutes, check the quality. If the quality is not good in one of these zones, there are higher chances of violating that daily zone. So this is the reason why you should be very careful before taking the entry. Many people, they're just happy because we have higher time frame monthly, we have intermediate time frame weekly, we have entry time frame, that is LTF time frame, lower time frame, that is daily. They just take that trade in that daily. But you should also do fine tuning the zone to check the quality of the zone. That means the price structure in that zone is good or not. You need to verify. At least up to 5 minutes level, you do some analysis with the help of this zone confluence. The zone confluence is very good in all these time frames. When you are doing with the help of finding the zones in lower time frames, inside one time frame, higher time frame, that way if you are going till 5 minutes, in all these levels, If the price structure is good, then you will be happy. You need not wait prices to reach up to that 5 minutes level. Maybe you may take entry at daily itself, at daily zone itself. But if in all these time frames, if the price structure is good, that means structure of the zones are good, then we have a confirmation that mostly the zone will work. If one of these zones, the structure is not good, there are higher chances of violating that zone. The zone will be violated. There are higher chances. At least 80% scenarios, the zone will be violated. 20% maybe it may work. There could be some other reasons behind that. But we can't uh, wait for the luck. The structure is not good, just leave. Look for some other stock having very good price structure till the 5 minutes level. So that is the reason why fine tuning the zone is also important. Fine tuning the zone not only for taking the entry, fine tuning the zone is also important for checking the quality of the zone. If the quality is not good, you can tell mostly the zone will be violated. See how much advantage how many advantages we are having by fine tuning the zone. Of course, for all these concepts, the main reason is zone confluence. And also this by using this fine tuning the zone under the risk management, by fine tuning, what happens? The risk will be reduced. See, look here. Recently, what we did, just I think on last Wednesday, I think Wednesday or Thursday, I think last Thursday, if I am not wrong, on 18th. 18th is Thursday, the last Thursday. We took an excellent trade on Balakrishna Industries. This is a W80 trade, weekly income trade. Let me show you. Let me go to the weekly time frame. The weekly zone is a all-time high zone because there are no supply zones. We have a drop candle, two base candles, and a leg in. This is a ERC candle. At least above 30% body is there in the ERC candle. So that is good enough to accept this as a leg out, especially. But where you have to keep your digital line low of this candle because this is a drop candle and this is a weekly time frame. Let me change the color to weekly demand zone. So this is a weekly demand zone. Let me make it even more light color. Even though it is weekly, I'm keeping monthly demand zone color. So what is the rule here? What is the concept we are following? Fine tuning the zone. Because we don't want to take trade. We want to take trade inside. By fine tuning a zone, again inside we will further fine tune. So from weekly, we fine tune to daily. So going one time frame below, in the daily identified, this was the price. I mean, prices didn't enter into the zone because this is what already happened. But at the time, on Wednesday, before taking the trade, the chart is something like this. Prices haven't entered into this. So that's why we identified a drop, base, rally. And this is the daily demand zone. So this is the first one is the weekly demand zone. Next one is the daily demand zone. Inside the daily demand zone, what we did again, we identified a 75 minutes demand zone inside this. So further it went to 75 minutes time frame. In the 75 minutes, we identified a demand zone. We have a drop, 3 base candles, but there is a pro gap is there. Most of you already learned about pro gap. When there is a pro gap, what happens? Prices just enter into this pro gap. Before reaching to the zone, prices will go up. So that's why including the pro gap, because pro gap is a small area, it is risk is also within the manageable level. So that is the reason why from this pro gap area till the digital line, we have drawn a zone. This is for 75 minutes zone. Okay, but I am giving daily color, but the zone is 75 minutes. So this is what we want to plan our trade. For that, calculated the risk, we calculated the trend, we have calculated the price directions, identified the location. All these things are in our favor. Because you already learned in the first, now I am not going into them. I am just telling you, everything is in our favor. But what is important for us as per this topic point of view is the quality of this zone is good or not. One thing is zone confluence helped us to minimize the risk. First of all, it helped us minimize the risk. The second point, it also helps in identifying the quality of this particular zone. So for identifying the quality, what you have to do? You have to check up to 5 minutes level. There is a proper structure is there or not. So for that went to the 15 minutes time frame. Inside the 15 minutes, identified rally candle, 2 base candles, and again a rally candle with hidden body because there is a gap is there. So you have to add the hidden body. So that's why rally, base, rally. So this is the way we have to. This is a 15 minute zone. But I'm giving 125 minutes color. See, this is a 15-minute zone. Inside this 75-minute zone, inside the 75 minutes is inside the daily zone. Something is missed. Yeah, no. This is the daily. This daily is inside the weekly zone. See, this entire thing is weekly. There here, this is the zone, so daily. Inside the zone, we have 75 minutes. Inside the 75 minutes, we have a valid price structure. Rally, base, rally. 2 base candles and a rally. Okay, now, is this enough to check the quality? No, you need to look even 5 minutes also. 5 minutes also the quality should be there. If the quality is not good, we can easily tell the zone will be violated. So for that again changed the time frame to 5 minutes. See here we have rally candle, 2 base candles, and again a rally candle with gap. This is one 5-minute zone, and another 5-minute zone also is available here. Inside we have a drop candle, 2 base candles, and again. So definitely first zone will work. In case any reason it fails, the second zone. So in the entire area we have 2 5 minutes levels are there inside the 15 minutes. Similarly, 15 minutes is there inside the 75 minutes. But because this is a WIT trade, we want to take a trade at the distal line of the 75 minute zone. You may ask a question, why can't we wait until prices enter into this 5 minutes area? Sometimes, you know what happens? If the order flow is very strong in this area, before entering inside the area itself, the prices will go up. When such kind of things will happen? When all the factors are in our favor, trend is in our favor, location is in our favor, price direction is in our favor, and moreover you have a a zone structure like 75 minutes is there inside the daily. Daily is there inside the weekly. When you have such kind of zone confluence, most of the times prices may not reach up to 5 minutes level or 15 minutes level. They just reach 75 minutes and then from there it will go. Or a little above 75 minutes, some buffer we have to add. Already I told you earlier, 0.1% or maximum 0.2. But 0.2 itself is it's a big buffer. So 0.1 is good enough. Just before that prices reach and then it will go up. Why? Because there is a huge order flow in that area. When there is a huge order flow, many times we miss the entries. So that's why in a clever way you have to place your orders, your buy orders or sell orders. See, everything is structured, but our plan is only at the 75 minutes level we want to take. So let me go to the 75 minutes time frame. See, this is our 75 minutes zone. This is the 75 minutes zone. Inside 15 and 5 minutes. So structure is good. That means we are having confidence that mostly this zone won't be violated. Because all the other factors are in our favor. Because this is a all-time high zone. The 75 minutes, the weekly trend is uptrend. Even daily trend is also uptrend. This is all-time high zone. So uptrend. Even the daily trend is also uptrend. Daily is the actual trend. For WIT trade, daily is the actual trend. And the weekly trend is HTF trend. Your daily trend is also, by the time prices reaches, it is not violated any demand zones. That's why it is uptrend. And from here you see how prices entered into this 75 minute zone. Just before the 75 minute zone, prices started moving up, moving up, moving up in 3 days. But what was our target is supposed to be 75 minutes. Because this is a 75 minutes entry, your target is a 75 minutes target. So where is the 75 minutes target after reaching this? So here we identified one 75 minutes target in this area. And during the same day itself it reached the target, 75 minutes target. Within the same day. That day we got around close to 22,000 rupees profit we got for one future slot, which is equivalent to 15.4% return on the investment. The cost of one future slot is around 1.5 lakh rupees. So we got 15.4% return on the investment. That is as per the cost of one future slot. If you are using options, maybe as per the options you will be calculating. Or if you would have gone for a cash trade, whatever the amount you spend on that amount, you would have got the profit. But this I am calculating as per one futures lot cost. Because futures, there is a margin amount is there, you get more profit compared to the cash trades. Compared to cash trades, futures, you get 4 times profits. 4 times or 5 times? I think 4 times. Higher profits. Even if you get losses also, it's like that only. That's why you should be very careful when you are dealing with futures and options. Generally, you know what happens? When you have such kind of structures, people mostly target for longer targets. Rather than this 75 minutes target, people look for even longer targets. When your entry zone is there inside the, entry means your LTF zone. Your LTF zone is there inside the ITF zone. Your ITF is there inside the HTF. See, whatever that trading strategy I am saying, fine tuning the zone, at least minimum 3 zones you have to look for. That is HTF, ITF and LTF. Your LTF zone should be inside the ITF zone. And ITF zone should be inside the HTF zone. When you have such kind of strategy, most of the time people target for HTF zone as the target. What is the belief? Prices will be traveling from HTF demand zone to HTF supply zone, and then they change the direction. Or HTF supply zone to HTF demand zone, and they change the direction. So that's why most of the time, what people do when they follow this approach, rather than keeping LTF as the target, they wait for prices reach up to HTF zones. This is some people's strategy. But HTF, we didn't have. Well, HTF means here weekly. But we didn't have a weekly supply zone. When we don't have a weekly supply zone, mostly all-time high is going to be the target. So what is the all-time high before prices entering into this area? This was the all-time high. Sorry. Let me draw the horizontal line. So at least here is the target. But last Saturday, because last Saturday is a trading day, it is a special trading day on Saturday. Generally Saturdays holidays, but we have a special trading day on this last Saturday. So last Saturday when prices went to a new all-time high. Let us understand what happened on the 75 minutes on this Saturday. See here on the Saturday they were continuously moving up, up, up. After reaching this, you can use a trailing stop loss also on 15 minutes time frame. See, they were moving. Either you can exit at the all-time high or still you can wait until a new supply zone is created. A new supply zone is created on the 75 minutes indicates again price direction will be changing. Why? When institutions create supply zones, what happens? It will push the prices down. Or you can wait until a new supply zone is created. Let us assume, because it's continuously moving up and no supply zones on even 15 minutes. Even 5 minutes, any supply zones after all-time high? No supply zones. Here a supply zone is created. Even if you exit somewhere here, that is almost near close of the day. You know how much profit you would have got when you took your trade? On Thursday, 18th. 18th, Thursday, we took the trade. 19th, let us assume you holded. 20th, you exited your trade at the closing of the day, or whatever the 5-minute supply zone is created in that area. That is also almost in the closing price level only. You know how much profit you would have got? See here, let us see the closing price. Let us calculate. We'll see. Let us assume near the closing price you exited. So approximate value we will calculate. Two 766 minus the entry is 2511. You would have got 255 rupees profit for one share, and the lot size of one futures is 300 for Balakrishna Industries. So 255 into 300, 76,500 rupees profit you would have got in just 3 trading days. And what is your investment? The cost of that particular one lot is around 1.5 lakh rupees. Maybe some 2 or 3,000, maybe a little above or little below, but around 1.5 lakh is the cost of one lot. That means you get 50% profit in just 3 days. Why you got this much profit? There are several reasons. Reason number one, we used this approach. Fine-tuning the zone, a powerful trading strategy. You have used that approach. What is that approach? If you want to take a trade in your LTF zone, your LTF should be there inside the ITF zone. Your ITF should be there inside the HTF zone. This is the trading strategy. I repeat again, your LTF zone should be inside the ITF zone. Your ITF zone should be inside the HTF zone. Is that enough? Not enough. Then what is the next point you should consider? You should fine tune your LTF zone to check the quality of the zone. That means our 75 minutes LTF zone, we fine tuned up to 5 minutes. How we fine tuned? From 75 minutes we went to 15 minutes. We identified a very good 15-minute structure demand zone. Inside the 15-minute structure, again we identified a good 5-minute structure zones. Luckily here we identified two 5-minute zones. That indicates there is a strong order flow is there inside the zone. And moreover, we have a very good reward from here to here. Let me draw the info line. This is the place we took the entry. Assume this is our first target. Actually, this is the first target. Actually, first target is not this one. The first target is from here to here. This is the first target. The immediately available supply zone. And your second target should be your HTF supply zone. But HTF is not having supply zone. All-time high we marked. That is our second target. Have we marked our all-time high in a wrong way? This is supposed to be all-time high. This is supposed to be before prices are entering. This one was the all-time high. So that means our target should have been this. Okay, just little above here, near closing price. Let me draw horizontal line. Closing of the day. Here we calculated. Even if you would have calculated till all-time high, maybe you would have got around 1,40,000 or 45,000 rupees profit you would have got. Or even close to 1.5 lakh you would have got. Now we got, close to 75,000 rupees you would have got. Now we got 76,500. Close to 75, maybe 74,000 or 73,000. That means we got half the amount of the profit for our investment. We got 50% return on the investment you got in just 3 trading sessions. You may ask a question, we got such a huge profit. Is it because of this strategy? Fine-tuning the zone strategy? Not really. Fine-tuning the zone, it increases our success rate. The reason why we got such a huge profit in a short period is because of this 75-minute zone. You may ask, what is the special of that 75-minute zone? That 75-minute zone is a high liquidity zone. You are not aware of this concept, high liquidity zone. But earlier also, in the phase 1 training program also, once I told you, our NeoStock software identified one special zones, the zones that are having higher success rate, the zones that are having more pending orders. Because they are having more pending orders, the push will be very, very high. That means from there, the prices will move very fast. That way we get more targets in a short period. We get more targets in short period. And moreover, apart from that, all other conditions are in our favor. What are the all other conditions? That is fine tuning the zone. What is fine tuning the zone? One fine tuning is related to checking the quality of the zone, and another fine tuning is taking your entry. Taking your entry, what is the fine tuning? Your LTF should be there inside the inside means overlap. Your LTF should overlap with ITF, and ITF should overlap with HTF. So that is what happened. 75 is a high liquidity zone. That itself is a very powerful. Apart from that, another power is added. The another power is fine tuning the zone, a powerful trading strategy. Now two powers are added. Apart from these two powers, third power is also added. What is the third power? Our decision making table. The decision making table I explained. What I explained? If trend should be in our favor, price direction should be in our favor, location should be in our favor, then it is a bullish trade setup. So that means it is a bullish trade setup. That is one advantage for us. And moreover, this is a zone confluence as per fine tuning the zone concept. The zone confluence as per fine tuning the zone. That is our LTF is in ITF, ITF is in HTF. That means LTF overlapped with ITF, ITF overlapped with HTF. That is the second powerful concept. And the third powerful and the most important powerful concept is the 75-minute zone is a high liquidity zone. When all these factors are in our favor, then where is the question of the failure? And the fifth also is there. What is the fifth? The quality of the zone is good. We should not forget that. Sorry, not fifth, the fourth point. The fourth point is quality of the zone. Quality of the zone also again we identified as by using the technique fine tuning the zone. That from 75 minutes we went one step below, that is 15 minutes. From 15 minutes we went again one step below, 5 minutes. In all these time frames, the quality of the zones are very good. That way we confirmed there is a very good order flow is there inside this zone. When all these powers are added, see how much profit it has given in a short period. 50% of your investment you got back in just 3 trading sessions. See, the cost of one futures lot is around 1.5 lakh and you got 76,500 rupees profit we got by comparing with the close of the price on Saturday. Let us assume during the closing hours you exited from the trade. If assume you got 50% profit. If you would have invested 1 crore rupees, you would have got 50 lakhs profit in one day. No, sorry, in 3 trading sessions. When all these factors are in your favor, when you are able to identify such kind of stocks, you get good profits in short period. See, the biggest thing, the biggest achievement in stock market is not getting good profits. Getting good profits is not the biggest achievement in stock market. Then what is the biggest achievement? Getting good profits in short period is the biggest achievement. That is what I believe. Getting good profits in short period. That's why the high liquidity zone concept what I developed, I kept that point in my mind and I developed the software. Because this 75-minute zone is a high liquidity zone. And moreover, the structure is very good in the lower time frames. Apart from that, at this 75 minutes zone, it is a very good WIT trade setup, bullish trade setup. WIT bullish trade setup. So that's why it gave such a good profit. But that day, in our trade point of view, we calculated only intraday related, how much it has profit given during the intraday. That is what we calculated. But those who eyed for HTF target, this is the LTF target. The 75-minute zone is the LTF target. And HTF target, whoever looking for HTF target, your HTF target is going to be your second target. First target is LTF target is the first target, and this is the second target, HTF target. Generally, we go for the second target only when we adopt this approach, the fine-tuning the zone approach. What is the fine-tuning the zone? This is for trading point of view. LTF should overlap with ITF, ITF should overlap with HTF. That means you are taking your entry in the HTF zone. Please remember, you should not forget that point. You are taking your entry at the HTF zone, but fine-tuned inside the LTF. So that is the reason why some people eye for HTF target rather than LTF target. HTF target means your HTF supply zone should be there. Because there is no HTF supply zone, your all-time high should be the target. When all-time high is there, people will go for even third target. What is the third target when all-time high scenarios are there? By using a trailing stop loss. If you are not aware of trailing stop loss, please look into NeoStock. One of the daily sessions, I explained the trailing stop loss. But I will also explain in the third phase of our training program. If anybody wants to learn a little earlier, I have already given. Go to NeoStock YouTube channel. There you scroll down to the playlist, terminology of NeoStock, demand zones. Here one of these videos I have explained. One of these videos. Maybe in the heading will be there, or you click on the video, go to the video description. In the description, I specify the topic names in the description. If trailing stop loss is there, go through that video. So if you would have followed the trailing stop loss, you would have exited somewhere here, or even a little higher also. Maybe you would have exited. That means you would have got even more profit than this 76,000 rupees. Maybe you would have got around 78 or 79,000 rupees profit. Okay, here, our importance is not knowing about high liquidity zones, that you will understand in the third phase of your training when I teach about the strategies, advanced strategies. What you have to focus is now on this topic, fine-tuning the zone. Fine-tuning the zone, we have two types. One is checking the quality of the zone, and second one is checking your trade. Taking the trade at LTF, but LTF should overlap with ITF, ITF should overlap with HTF. That is the first step. Second step, again further fine-tuning to lower time frames until 5 minutes to check the quality of the zone. Both the things you have to do. You should not limit yourself for only LTF zone and taking an entry. Many people get losses because of that, not following the second step. Following the second step is, first of all, people doesn't know they have to follow the second step. Following the second step, looking into the 15 minutes inside the 15 minutes. 5 minutes, if it is a 75, is your entry time frame. That is your LTF time frame. Why you have to look 15 minutes, again inside 15 minutes, 5 minutes, to check the quality of the zone. That is what happened in Dr. Reddy example I shown you, right? See, the quality looks excellent the moment you look into 75 minutes drop, 3 base candles drop. Anybody by seeing this zone, they say amazing, excellent. We have excellent leg in candle, we have an excellent leg out candle. After that, there is a very good follow through candle. Oh, it's an amazing, definitely we get success. That is what people think. That's why many people get failures when they are using the supply demand zone. But what is that identified? Identified, that is not enough. We can identify quality of the zone by fine tuning, by further getting into the next levels. See here 15 minutes is not at all good. So I didn't go for even 5 minutes. I didn't care because 15 minutes is not good. If 15 minutes is good, I would have further looked into 5 minutes and I would have checked the quality of the zone. That is what we did it for Balakrishna Industries. We checked 15 minutes is good. Then again inside 15 minutes we checked 5 minutes. 5 minutes is also good. That's why we took a trade here because other conditions are supporting us. So that's why when I say fine tuning, you have to do 2 steps. Fine tuning the zone is a 2-step process. First step is entry level, taking where to take the entry. You have to take entry at LTF, but LTF should overlap with ITF. ITF should overlap with HTF. That is the first step. That is not enough. You have to do second step. What is the second step? Again, from your LTF zone, go to lower time frame, check the quality of the zone. If the zone is good inside that zone, again go one more time frame below up to 5 minutes level, check the quality. If in all these time frames the quality of the zones are good, then you can confirm the zone is having a good institutional pending orders. That way the zone will be having higher success rate. If your entry zone is, or if your fine-tuned zone is inside high liquidity zone, or your entry zone is high liquidity zone, then the results are going to be amazing. That is a different story. That you will understand when I explain about strategies in the third phase of our training program. But I already gave you an overview in this practical session. That's why all these days we are getting a huge success for our high liquidity zones. But I limited my current strategy to getting profits during the intraday itself. The profits you are going to get in next 3 days or 4 days, the same profit you get during intraday itself. The same thing you can extend to your W80 trades or monthly income trades. That is what, that example I shown you in this Balakrishna Industries. Hope now you got clarity about what is a zone confluence, risk management. Risk management is because of this zone confluence. I didn't give you an example about the risk management exactly. Suppose, okay, let us assume this is not W80 trade. You want to plan for okay, even if it is W80 trade, let us assume this risk is not manageable to you. You can't take trade this much risk. So what you have to do, instead of planning at this proximal level, because this is not a good example, but please listen. The reason a lot professional gap is there, so many things are there. There are higher chances to miss. Maybe next time again, prices are entering into this zone. How you can plan the trade? That is what I'm telling. Generally, what you do, you go to type 2 entry. What is type 2? This is going to be your type 2. Sorry, let me go to 75 minutes time frame. Because you want to take an entry in 75 minutes, right? Let me delete what we have drawn inside so that you get clarity. So you want to plan type 2. So this is going to be highest. This is supposed to be your entry in 75 minutes. Because you can't handle this much, you can't take this much risk. Even by including professional gap, this much risk you can't take. Then you want to go for type 1 entry, higher wick. Even type 2 is also, type 1 also you can't handle. Go to type 2. If type 2 also you can't handle, go to type 3. See, this is a random. This is a random way you are changing. But what is the real way you need to change? by finding the origin, where exactly the real order flow is there inside this zone. That is important. Most of the time prices will be traveling till the order, where the order flow is there. You may ask a question, why prices, in this example, why prices didn't go inside this zone? Before reaching itself, why they went? Because there is an order flow. When there is a professional gap, there is an order flow before the zone. Within the gap area, there is a pending orders will be there. Suppose there is no pro gap area, let us assume there is no pro gap area, then mostly prices will be moving inside until where the order flow is there. How do you identify where the real order flow is there? By fine tuning the zone with the help of zone confluence. Go one step below, that is 15 minutes. So inside this, we identified a 15-minute zone. This is the type 2. Still, even if you can't manage this risk, what you do? Go to 5 minutes level. Further, you fine tune the zone. Okay, in this example also it is same, but only what is changed? Your risk level is changed now. Your stop loss is changed. Generally, you know what, when you fine tune, people will keep this as a stop loss or further below 75 minutes as a stop loss, taking the entry. But if you feel this risk is very, very high for you to handle, then you have to compromise for the stop loss. In the real order flow, whatever is there the distal line, whatever is there within the 5 minutes, that there you will keep. Most of the time, if the zones are good zones, you get success. Price won't go to the 5 minutes distal lines, because there is a strong order flow. This strong order flow will push the price up. So this is the way now your risk is minimized now. Now go to 75 minutes, you get clarity. Where you would have taken your entry in 75 minutes, or now where you are taking the order. See here. Now you are taking your order here. And your stop loss is also now minimized, not 75 minutes distal line, the 5 minutes distal line. And if you feel till that 75 minutes distal line, the risk is very high, then you will take your 5 minutes distal line or maybe 15 minutes distal line. That way you will plan your trade, your risk management point of view. So that means you are not depending on proximal type 1 proximal or type 2 proximal or type 3 proximal of your LTF zone. You are not depending on that. Then what you are depending? You are depending on type 1 or type 2 or type 3 proximal by fine tuning the zone. You fine tune to 15 minutes or 5 minutes. There in that you may be using the type 1 or type 2. Depending on the risk management point of view. If the risk is within manageable at the 5 minutes level, mostly you take type 1 entry itself, because you don't want to miss the trade if the risk is within your manageable level. Always remember, fine tune the zone and then you take a decision in the fine tuned area whether I have to go to type 1 or type 2 or type 3, depending on your risk management. Anyway, all these things you will understand when you practice more and more. Anyway, we will be discussing these concepts because every day, daily videos, I'm explaining these concepts. So please go through some of the daily videos, especially in the NeoStock terminology, the playlist. In that playlist, whatever videos are there, go through those videos. Because in everyday videos, only difference is the zone is a high liquidity zone generated by NeoStock software. That is the only difference. Remaining all same concept we are using. Whatever the NeoStock high liquidity zone generated software, I am using that as a HTF zone, higher time frame zone. From there, I am fine tuning to, so if it is a 75 minutes, I am fine tuning to 15 minutes. Again, the 15 minutes I am fine tuning to 5 minutes and taking entry in that 5 minutes. That means my 5 minutes is the entry, LTF. The LTF is overlapped with ITF, that is 15 minute zone. The 15 minute zone is overlapped with my HTF, that is 75 minute zone. This is the approach I am doing. If it is a daily high liquidity zone generated by our software, same approach again I am doing. What is that I am doing? 75 minutes I am fine tuning to, daily I am fine tuning to 75 minutes. My daily is the HTF. And inside the 75 minutes, I am further fine tuning to 75 minutes is ITF. I am fine tuning to 15 minutes. 15 minutes supposed to be LTF. If that 15 minute zone risk is high, what I am doing? I am again further fine tuning that 15 minutes to 5 minutes, taking entry in 5 minutes zone. But target is 15 minutes target only. Generally 15 minutes target will be achieved in next 3 to 5 trading sessions. But NeoStock high liquidity zones, special zones, they are giving the target on the same day itself. Intraday itself, it is reaching the target. That is one advantage of this special concept. So, which approach I am following for the high liquidity zones, NeoStock high liquidity zones? I am following fine tuning the zone concept. The two-step process I am following. The first step, LTF is inside ITF, ITF is inside HTF. But the HTF zone is a high liquidity zone generated by NeoStock software. But I am adapting this approach. But what many people are doing, who wants to trade on 15 minutes and 5 minutes, randomly whichever the 15 minutes, they are taking and they are trading. Not using this trading strategy. That means their 15 minute zone is not in not overlapped with ITF or not overlapped with HTF. But why NeoStock high liquidity zone concept is having success? Two reasons. Reason one, the high liquidity zone is a special zone identified by the software using special algorithms, and those algorithms assuming the zone is having a lot of pending orders. So success will be high. That is one reason. That is purely software point of view. And the second reason, our trading strategy. What is the trading fine-tuning the zone strategy? Your LTF should overlap with ITF, ITF should overlap with HTF. Simple thing I am doing. I am taking that zone, high liquidity zone, daily zone. I am considering inside that I am finding ITF zone. Inside the ITF, I am finding the LTF zone. And only one advantage the high liquidity zones having NeoStock's high liquidity zones, because there are a lot of pending orders. Even if the trend is not supporting, even the location is not supporting, even price direction is also not supporting, still the trade is reaching the 15 minutes target during the intraday itself. That's why for NeoStock high liquidity zones, I don't bother about trend, I don't bother about price direction, I don't bother about the location. They are working. Except that remaining all other concepts, you must follow all these rules. Your trend, location, price direction, everything you have to follow. If you don't follow, you won't be getting the success easily. Only one NeoStock high liquidity zones, only having all these exceptions. But the strategy should be this same strategy, fine-tuning the zone strategy. They have to adapt. You cannot take trade directly in the NeoStock high liquidity daily zone or 75 minute zone. You cannot take. You can take trade only in special scenario. What is that? If that high liquidity zone is supported by as a LTF, that generally we take high liquidity zone as a HTF. But if you take NeoStock high liquidity zone as a LTF, the LTF zone should be there in the ITF, that should be there in the HTF. That is what you have seen for Balakrishna Industries. When you can able to find such kind of setup, then directly you can take entry on the NeoStock high liquidity zone. Those people who are looking for WIT trades or weekly income trade or monthly income trade, they can follow this strategy. But such kind of opportunities you won't get every day. That's why the other way around I'm using. What is the other way around? The high liquidity zone I'm using as a HTF zone and following fine tuning the zone strategy. Actually, I would have explained in a separate video about these high liquidity zones. The reason is most of you are not aware of high liquidity zones. But still, why I'm including this discussion in this video is probably those who already completed the courses and listening this practical video will be useful to them. And for you, it will be an overview for you before getting into the third phase of our training program. It will be an overview, and at the time we will discuss with proper PowerPoint presentation. I will explain these steps. Now I'm only just explaining orally. Hope now you got better clarity about the zone confluence and its advantages, and really you have experienced its power, because getting 50% profit in just 3 days is not a joke. Your investment is 1.5 lakh, that is one futures margin, but your profit is 50% of that. Those who invested in crores, they would have really understood how much profit they got in a small period. That's why I gave you that example. If you would have, if your margin cost is 1 crore, those many futures, if you would have purchased, you would have got 50 lakhs profit in just 3 days. Okay, so this is about the practical session, and in the next lesson, lesson 17, we will discuss about exponential moving average, EMA 20. First of all, what is a moving average? I will explain. With simple example, I will explain. And formula also I will give for simple moving average. At least why I am saying formula is required, it's a very simple formula for moving average, because all you people know how to average. During your studies, you have averaged your exam marks, right? Your percentage. Same way, but small difference. EMA 20 formula not required. Exponential, that is a complicated formula. You don't require that. What is the concept you should know? Then we will explain. I will explain what is EMA confluence. So far you learned zone confluence. Now you are going to learn another concept, EMA confluence. Both are not same concepts. But zone confluence is different. EMA confluence is different. And then we will also, once you understand EMA, then you will be able to understand the concept price over extension. These are some people also call price over extended. Both the terminologies people will use, price over extension or price over extended. This we will discuss in our next lesson. So if you have any doubts regarding to in the current topic, please put your questions in the comment section. So let us all meet again in our next session. Thank you.